Scott, what is your leading thought when it comes to these various tech giants and their earnings reports? Because it really does. I mean, on the face of it, it seems obvious that they would be performing well right now, and yet those numbers still were pretty impressive, even given the increased traffic and such that we have seen from people staying at home.
Well, I think the first takeaway is it's just fantastic to be an unregulated monopoly in a pandemic. It's, these companies in the 15 minutes post the close of the market yesterday, post earnings announcements, added the value of AT&T, Twitter, and Pinterest. And yet, according to Mark Zuckerberg, there's competitors attacking him from everywhere. And you see the market, despite the fact these indices are very much driven by the performance of these companies, the indices are down because I think the marketplace is beginning to collectively recognize that when all of the spoils are concentrated across an increasingly small number of firms, it makes for an unhealthy ecosystem and unhealthy economy. So while these shareholders should be celebrating, I think more broadly, the markets are justifiably very concerned about what's going on here.
Well, it's good to see you, Scott. It's Adam Shapiro, yeah. And I am curious because we heard David Cicilline, the representative from Rhode Island, actually say what you just alluded to, unregulated monopolies, and he said they should be broken up. Is it a serious threat they face?
Well, so I want to be clear. I've made this statement several times, but after watching the hearings, I thought, again, this is the beginning of the end of big tech as we know it. And I think we have to move from a construct of believing that it's some sort of punishment or they've done something wrong. I think America has a proud legacy of antitrust. When any one company gets so powerful that it begins to cut off the oxygen to the sector and the rest of the economy, we go in and we oxygenate the economy by breaking that firm up. So I think they should be congratulated. I think it's incredible what they've accomplished. But yeah, it is time to return to our roots and break up this company. And by the way, as an Amazon and an Apple shareholder, I think the value of my shares go up once they announce they're breaking up. I think AWS will be the most valuable company in the world as an independent company in 3 to 4 years. So, I do think this is the beginning of the end. Even if Trump gets reelected, I think there's going to be some action. If Biden gets elected, it'll just go faster. But we are well past due here to go in and do what we did to the aluminum companies and AT&T and oxygenate the marketplace.
Scott, Dan Roberts here. Let's talk about the hearings because with some exceptions, Amazon took the most antitrust questions, which I guess was to be expected. And then most of the questions directed at Facebook and Alphabet, and I thought it was surprising this was the topic for Alphabet, were about political censorship, which, I don't know what kind of relevance that had when it was supposed to be a hearing on antitrust. But two questions that prompted for me. One is, it seemed to me to make it even more the case that Apple is removing itself from this group in terms of the antitrust challenges. That is, even before the pandemic, it kind of felt like Apple was becoming less of a target, whether rightly or wrongly, from lawmakers concerned about the size of these companies. And then second, because of the politics that came up, I was a little disappointed that Twitter, in the end, was not included in these hearings.
So my sense is about half the panel, mostly the Republicans, showed up to the wrong hearing, that they didn't get the memo that this was an antitrust hearing. And the conservative bias, quite frankly, 7 of the 10 most trafficked Facebook pages are conservative-leaning content platforms. So there's not only no evidence of a conservative bias, it has nothing to do with antitrust. I actually disagree, Adam. I don't think Twitter is relevant. I mean, the individual that got the toughest grilling the first 2 hours of the hearing was Jack Dorsey. Unfortunately, he wasn't in the room. But as it relates to antitrust, the actual subject matter here, the notion that we're going to break off or force Twitter to divest Kanye's account and list it on the NASDAQ, there's nothing here that makes sense as it relates to antitrust. And Twitter has a $28 billion market cap. These companies average $1.25 trillion. So if Jack Dorsey was invited to testify and we were trying to figure out a way to demonstrate the scale of these problems, Jack Dorsey would need to show up and be 4 inches tall and weigh 2 pounds. Twitter doesn't have nearly the economic influence to kill other competitors. I believe that Facebook and Google have decided to keep Twitter in business and could put them out of business in about 7 days if they wanted to, because they like to point to them as a competitor. So I don't think for the purposes of antitrust, Twitter was really relevant to yesterday's hearings.
Scott, it's Dan Howley. Looking at wrapping or pulling these companies apart, the idea that we would separate them if they're found to be illegal monopolies. I mean, it seems easy enough with Amazon, right? E-commerce, AWS, cut right down the middle. But it becomes more difficult. How would you do that with something like Apple, for instance, or that would just be a remedy? And how would you do that with Google or a Facebook? Facebook purposely is integrating all of their back end to make that more difficult. So how would you go about that with those two?
Yeah, Dan 1 and Dan 2, I didn't answer Dan 1's question about Apple. So look, Apple is the least elegant antitrust is you not only oxygenate the marketplace, you not only make the marketplace more competitive, but you unlock shareholder value for the company you're breaking up. The baby bells were all worth more than the original parent within 10 years. So elegant antitrust keeps those green lights, those green numbers moving. So Apple is probably the least obvious for antitrust because the primary asset of Apple, one could argue, is its brand. And then it becomes a question of which company has domain over the brand. I would argue that Apple is really more a function of regulation, specifically around the App Store, when you have a duopoly that controls the rails and they can tax any company they want 30% in this app economy. But I would agree with you. Facebook, Instagram, WhatsApp, Google, YouTube, Google Cloud, Amazon, AWS, Amazon Fulfillment. All right, so there's nine companies from 3. Apple is more about regulation than it is about antitrust.
Scott, one of the things that I always have trouble wrapping my head around, though, when we talk about these antitrust questions is just how popular these services are. I mean, and of course, Jeff Bezos talked about that in his opening statement. He kept touting the figures out, how positive Amazon is, how popular Amazon is. But he has a point. I mean, we all throw our money at these companies. We throw our participation at these companies. We use them heavily. And so unlike sort of the antitrust breakups of the past where there was more of a villain perspective, how do you square that? I mean, don't you need to rewrite antitrust law if people feel that they are still benefiting and getting low prices and doing well because of these services?
Yeah, I think that's the correct question, Julie. Antitrust law as it exists now is kind of from the Bush administration, it's Bork, and the primary test, and we love to be able to quantify things, is consumer harm as indicated or reflected by prices. So it's difficult to apply that litmus test to firms that are offering the product for free. And we have an unusual dynamic in the marketplace where investors have decided to replace profits with growth and vision when assessing where the stock price should head. So as a result, we have these companies that are able to offer products for below price. That was kind of a seminal moment yesterday when Bezos acknowledged that the Amazon Alexa device, oftentimes they sell for below price. When the Chinese came and tried to consolidate the market by pricing steel below the cost, we called it dumping. When Amazon does it, we call it innovation. So even despite the fact that consumers are, quote unquote, love them and paying a lower cost, I would argue it depends how you define price. I think your and I costs or prices, Julie, as parents have skyrocketed as our kids enter the teen years and they're more prone to self-harm and teen suicide because of unfettered social media that attacks their self-esteem. I think as entrepreneurs trying to start companies, the fact that new business formation has been cut in half at the hands of monopolies that are unregulated with feckless leadership in DC, that entrepreneurs pay a higher price. I think as taxpayers, when the world's most profitable and valuable companies in the world do not pay their fair share of taxes, our prices as citizens have skyrocketed. And finally, as people in love with a great experiment called democracy, when our elections are perverted, when the sanctity of our democracy is threatened by a company that really doesn't give a good goddamn about the well-being of the Commonwealth, I think our prices have skyrocketed. So I think price is a loaded word.
Scott, I just want to touch real quickly on, the idea of some form of regulation around the data that we provide, right? Not necessarily privacy, but providing users some kind of fee structure or perhaps having companies pay users for their data, right? Because isn't that how all of these companies, Apple and Amazon notwithstanding, so really Google and Facebook, but they made their fortunes on our data without us necessarily knowing what it was or what we were giving up. So what are your thoughts on some kind of payment structure that the companies would have to provide for the data that you use?
Deanna, I think it sounds interesting in theory, this notion that data is the new oil and we each have domain over our own data and we should be compensated for it. But practically speaking, I don't know how you would construct that. And I just think they're smarter than we are and that they'll figure out a way to get around that. I think that would be very difficult legislation to enforce. I think you want a fairly simple and elegant means of trying to increase competition, which I believe would reduce a lot of the externalities. The notion of sort of a data cooperative where we all get a check or have domain over it. Younger people, we talk a big game about privacy in the media. The reality is consumers love to have their privacy violated as long as there's a coupon or a cheap phone at the end of it. But we elect people who are supposed to figure out the long-term health of the economy and the Commonwealth. And I just find the most elegant solution here would be antitrust, not some sort of data cooperative. There are few things the government always gets right. And people have a tough time pointing to any antitrust action that 10, 20, 30 years hence, we don't look back and go, yeah, at the time, that was absolutely the right thing to do. So a data cooperative, I think it's really interesting. Practically speaking, I think it would be very hard to implement and manage.
Scott, it is always good to get time with you. Scott Galloway is professor of marketing at the NYU Stern School of Business. Thank you so much.
Thanks, Julie.